Some new reaction today to the domestic impact of the war in Iran, compounded by a weak jobs report. Joining me now is our friend Ron Insana, senior analyst and commentator at CNBC. Ron, big welcome to you. Looking at the U.S. labor market, it lost 92,000 jobs in February, falling extremely short of January's gain of 126,000 jobs. Meanwhile, the unemployment rate climbed slightly higher to 4.4%. So what kind of outlook does this paint for the U.S. economy? Does this add another layer of uncertainty in what was looking to be a resilient job market?
Yeah, Alex, this kind of puts us deeper into the stagflation environment that we've been talking about for several months now, where inflation remains above the Fed's target of 2%. And now with energy prices surging, that just adds more literal fuel to that fire. And at the same time, not only did we see 92,000 jobs lost last month, but we also saw some downward revisions in prior months that shows that since Liberation Day in April, we've barely generated any jobs at all in the United States. And over the last 6 months, on average, have lost about 1,000 jobs per month during that period. So you've got a weak labor market. You also had the Atlanta Federal Reserve downgrade estimates for first quarter growth yesterday from 3% to 2.1%. So you have this muddle through economy that I would not quite call a golden age. We have some problems ahead of us with rising price of energy, inflation still too high, and the job market softening far more than was expected.
So the director of National Economic Council, Kevin Hassett, is still boasting a strong economy, attributing February's dip to just one-offs. Take a listen.
We had a surprisingly positive one last month and a surprisingly negative one this one. But on average, it's about what we expect to be seeing because immigration has gone down by so much that break-even employment is probably in the sort of 30 or 40,000 jobs a month range. And so, yeah, I think it's consistent with everything else we're seeing, which is that the economy is really strong.
Is this just a one-off?
No, not by any stretch of the imagination. Again, as stated earlier, I mean, we've since last April, which had nothing to do with the weather, had nothing to do with one-offs, as Kevin Hassett suggested yesterday on CNBC. You know, we've had no job growth since last April. And again, last 6 months, we've lost 1,000 jobs per month. This last month was affected by a nurses' strike that accounted for 31,000 of those 92,000 jobs lost. Kevin Hassett tried to fob this off on the weather, but you go back almost a full year, and you can't complain that every month has been a weather-related event. So this is not a very strong economy by any stretch of the imagination. It's got its own issues. Number one is that weakening labor market, and maybe even more important is the stickiness of inflation. Grocery prices continue higher. Now we have gasoline. You know, an Iranian oil refinery or oil installation was hit today. That could drive oil to $100 next week. That means close to $4 gasoline. Child care is expensive. Health insurance is expensive. Will get more expensive over time. And so this affordability crisis will continue as long as this war goes on. And the labor market at the moment is not showing any signs of improvement. So, you know, it's very difficult to say this is a very strong economy when the numbers just don't bear it out.
Yeah, well, let's say they're maybe pushing to $4 a gallon for gas across the country, but at least right now it's at $3.41. It did jump 9 cents from yesterday, which is remarkable in itself.
And a couple weeks ago it was at $2.80. You know, right? So we're up 6 cents in a couple of weeks.
Yeah. So are we in for a rough road ahead as this conflict continues in the Middle East? What might mitigate that rough road?
Well, an end of the war would be one thing, a quick end, you know, that kind of returns us to the prior status quo. I don't know what else mitigates it. I mean, the president wants the Federal Reserve to lower interest rates. Would they'd be disinclined to do that with energy prices and inflation, you know, still moving higher rather than lower. I'm not quite sure what accelerates economic activity. We've got some other potholes potentially ahead of us. Private credit, which is an area of the financial markets that's been seeing some difficulty of late, could also create a market event that's has adverse consequences to the economy. So the One Big Beautiful Bill does provide some corporate tax cuts. It does provide some tax refunds that are larger nominally than they were last year. But I don't see any major development in the near future that would reaccelerate the economy in such a way that the job market would benefit. These seems to be structural job losses, nothing that the Federal Reserve can solve with a quarter point cut in interest rates.
Okay, Ron Insana, I always love having you on. You make it so we can all understand what's going on. Thank you much.